One more chart I want to throw up here at the end of the day. SPOOs again going out at 1372. Have traded off here to 1369 here in the after hours on the sweet IBM earnings. They blew them out. Whether or not you believe the game of set low expectations and beat is part of the game or not. Market's looking good. One thing I want to point out here is this is the 10-year. This is daily chart, so this is going back a year plus, really a year and a quarter. You can see last summer we hit a spike of just over 5.2% in the 10-year. We're now spiking to 3.7. The last 3 days we've seen a huge rally, suggesting that interest rates may be putting in their bottom here in the March timeframe. We did not get as low on the interest rates, you can see, as we did here on this push in January. We're right up against the trend line again. What you're looking for here for a breakout on interest rates to go higher, which would stifle inflation, which is again counterintuitive to what the Fed's talking about, lowering rates still in the final April 30th meeting. FOMC meets again. But one thing that I would point out here is if we get over this 37 hump on a close, we're probably going to run up here to 38.66. You can see this line here, which was the low and almost coincides with the high set early this year. But then you're really going to get bullish if you get over this area, which is right around 40. So I'd be looking for this. If you want a way to play the short, is to take the long bond. That's the 10-year rate, but you can take the long bond, the future, which is inverse to what we just looked at. And this is the 30-year Treasury bonds. That was the 10-year rate we were looking at before. Very similar chart, except it's an inverse if you flipped it upside down. And you can short this future. The USM08 does trade at the CBOT. If you wanted a way to short this, you could go ahead and put a short. You can actually see here, depending on where you draw the line, and I drew two lines here. Here's one line through all of these lows that we actually have broken through today on the daily chart. The second line is a little bit further below. If you're more conservative, you probably need a break of somewhere here under 116. We're at 117 right now. So let's watch this the next few days. The 10-minute moving average is still bullish above the 40, but it has not broke over it. Don't try to predict these things. I wait for them really to cross before putting on a more firm position. And then at least you know where your defined risk is above that, if they were to flip back over or if we took out a new high. So this is one way to play the interest rates going forward. If the interest rates are to start going up to stifle the inflation in oil and all the commodities, this would be one way to do it, and that would be higher interest rates, which means lower bond prices here. So that's it. Everybody have a great day. It's Wednesday, hump day. Tomorrow is Thursday. We've got Passover coming in for the weekend, so the Jewish holidays, high holidays are coming. It's going to be very quiet, I think, as we get into Friday. We have jobless claims, leading indicators, and Philly Fed tomorrow, and natural gas number at 10:30. All that is Eastern. So let's be on the lookout. We could see some selling. Probably going to be another quiet day tomorrow after a big. It seems like this rally tends to flatline after we have a big update like we did today. So we'll be back tomorrow. Have a great evening, and we'll talk soon.